Hello and welcome guys to the 107th edition of the Trading Opportunities webinar. This is Nirav and let me just quickly check audios at my end before we proceed. Hello. Hello, mic test. All right. So here with legalities, a quick disclaimer. And let's now proceed with our very quick introduction about this webinar series. For those of you who are new here, we are in the 107th iteration of the Trading Opportunities webinar. This is a webinar series which we do every week and Friday at 7:30 p.m. IST, 2 p.m. GMT. Yes. So as I was saying, we do this webinar series every Friday at 7:30 p.m. IST or 2 p.m. GMT. And you can just convert it to your respective time zones if you are watching it later on, and if you have some questions you would like to join in the next webinar at these times, and you can ask anything related to these markets which we discussed in the live chat, of course, right? And in this iteration, I would like to point out that every single trade we discussed in the 106th webinar has played out. Literally all 6 setups have worked out, and some of them were quite substantial, and we also were able to make quite substantial wins on specifically S&P counter, me along with some of the members, right? So we will look at it later on as we go along the webinar. So in this 107th webinar, one more thing I'd like to point out that we have so far done 106, and including the last one, we have captured 245 trades in these webinars, right? Of course, you can watch all of this by heading to the YouTube channel, etc., etc. Last thing which we like to point out is I'm also the author of the Think with the Markets book, available on Kindle, Amazon's electronic book delivery platform. Right, you can find more details here by visiting 50hours.com/think with the markets, or just check it out on Amazon, or the links here are available for country specific. And you can also subscribe to the mailing list to remain updated for all the new things, information, content, etc., which we release. And lastly, the forecast accuracy. I have documented all the work that I have done over the years since 2016. As you can see, we have had a tremendous accuracy in predicting the markets, and it's remained above industry standards. You can just check it in your own time. I won't take too much of a time here and bore you guys with it. What basically this is the date and the instrument name along with the analysis and the link for the YouTube video and the article for this analysis, right? And this is a compilation for 6 years. After that, we have been doing weekly since 2022, and we have done 104 with 245 trades. So that's about that. And lastly, currently the course is running at a 5% discount. You can check it by visiting Elliott Wave course link on the homepage of 50hours.com and check out the details. It is 4.95 rated currently, I believe, on the platform it's listed, and it's a public platform, so you can check the reviews, etc., everything. Probably I'm the top rated instructor there in finance. Anyways, let's head back to our webinar series. So the way we will proceed is, as always, we'll go over the charts of Euro USD, followed by crude oil, gold, S&P's 500, Nifty, and in the end, we'll discuss Bitcoin, right? And before we discuss any chart, we'll also look at the last analysis we did on the chart. So starting off with the Euro, let's see what we were discussing on this counter in the last webinar. So here's the chart, or 1 second. Yeah, there it is, the quick chart of Euro from our last webinar, or what you call 106th webinar. Let's play the video and see what was being discussed on this counter. I'm increasing the speed to 2x. I think the idea was very simple. We were expecting a break of the trend line, and then the retest would give us a selling opportunity. As you can see, me being pointing that out with the arrows and everything, right? I'll just leave it there. And as we see in the live chart, this webinar was conducted, the last webinar was conducted on 15th March, and there it is. The market did retest, gave a sell off, gave another retest. In this particular case, it was more than kind of a retest. It did try to penetrate inside it, failed break, we can say, and then it went down again. So basically what happened really here is the setup did play out, and not only that, I was able to capture trades on this particular setup. Let's have a very quick look at that as well. Where is the euro thing? Yeah, there it is, our Slack post on Euro USD. And we went down precisely as per analysis. Where is that? Added minor shorts. There it is. This is the trade from yesterday itself. Instead of going in too much detail over everything, because a lot of these posts covered the whole downward fall. You can see that, right? But instead of going over all that, I'll just point out the trade. We added shorts around 1.08732 and exited as the market went down to 1.08139 something. I exited before this particular level, but captured a substantial part of this leg down. 8732. So somewhere here we shorted and captured this much. So it was one of the trades, and as I said, over the week also we were following it in quite detail. Again, in case you are interested, you can send the requests to our contact us page inquiring about our Slack private group. Let me make that scroll in the bottom part of the screen. So you will be able to see the link here in the bottom part, and using that link you can make the request for the details for the Slack private group. Yeah, as I was saying, Euro, it has worked out as expected, and we are expecting. Let me squeeze the chart and tell you what the actual count is that we are expecting on this counter. So there are 2-3 different ways, and the less likely count, not less likely, let's say the secondary count, which I was expecting of a triangle, seems to be progressing here. And let me just draw out so that you can have a clearer picture. Now we are expecting that this is going to become an A down, and then this is a triangle with its 5 legs in play. The first leg is called an A, B, C, and D, of course. Right. And with that being said, we are seemingly in the wave D down, right? If that is the correct count, then we should never see a break of 1.09523 without the market taking out the low of 1.06952, basically this low, right? So we want to see the market sustain below this alert line, 1.09512, or you can just call it this last high, right? And we want the market to maybe propagate sideways or not, but eventually break the low, right? So setup remains bearish overall, and personally, one more leg I think may be remaining here in this counter if this is the triangle count, right? So long story short, if this is the triangle count, we would look to initiate sells below 1.076, right? And if something else is going on, then we will know it if the market crosses this high or goes above invalidation level 1.09557. So that remains the setup. We look for bearish bias, and we look for selling opportunities unless this level is crossed. And a cautious approach, as I always mention, would be to take shorts below the break of low, that is below 1.07121. That will be the most optimum approach, that once this low is broken, the one marked by the yellow dotted line, 1.06990, then we will be most certain that this market has really gone through the progression as we intended to and is falling down, right? Anything taken above it is risky, and stop loss, as you already know, technically will remain above 1.09367 or this high. So that's about it for euro. I'm not currently holding any positions on euro, and while I am thinking that it might be doing a triangle count, it does look like it is forming a sort of complex correction, and hence I will personally like to wait and watch. And even if I take positions, I like to keep them small, because this overall from this point onwards has remained sort of very corrective and sort of complex looking, so it can take any form. That's about it for euro. If you guys have any doubts, questions, queries in this on this counter about this analysis, you can always post them in the live chat. And if you are live, which I can see a lot of people are, how about saying a little bit of hi, hello? Of course, we are doing a live webinar, and that's the purpose of these things, to have a little chit chat while we do them. And let's move ahead with our next chart of CL. CL. And this one also, as I said, all 6 setups we discussed in the last one are played out. So let's check what was being said on this one in specific, and what really happened afterwards on this counter. So here is the recording, and let's head over to our discussion of euro, which is being discussed around here somewhere. So this is the last webinar's discussion, and I have zoomed in the recording, so just so you can see that we are expecting a leg up after this circled one red, circle two red, and then the upward movement continues, with the implied target being 83.51 as our immediate target. Now, interestingly, what happened is the market did go and touch 83.51, and not only did it touch that level, it did reverse from that level as well. Very interesting, right? And so, by the way, you can watch this whole thing of crude oil discussion from 12 to around 16 something. But we are not going into too much detail, and I'll just head over to our current chart now. So here's the chart, and this is 15th. 15th is here somewhere. Yes, somewhere here we were discussing the market. So from here we said that 83.51 is the expected target. Now this, as you can see, is the 83 point. I mean, it's literally there. Let me remove everything here. Now you can see it literally went to 83.533. So it did touch the target, and not only did it do that, it then reversed from there. Right. So everything discussed in the last webinar played out precisely as per our analysis. And of course, I was following it every step of the way in my live posts. We were actually able to predict that expectation of down move and a possible diagonal here, as you can see. Let me show you the recording, not I mean the Slack group post. So here we were expecting a diagonal formation here in the group. It was posted here. Let me zoom in. So around 3.50, there was this expectation that it will form a diagonal and then reverse lower. So anyways, now that we have all that clear, let's see what's this market doing right now. What happened to the chat here? I don't see literally anybody active today. But anyways, proceeding in that case directly to our conversation, we are saying that the crude oil may have one leg remaining. That what seems to be the case here. And the expectation is that we have a possible WXY in play. This is the point of reference or the starting point of this analysis. We have 83.533 or whatever that level was. First leg down, corrective W, and then X may be complete here. Maybe has some sideways movement remaining around 81.826, and then new leg down for Y. That's the expectation. Again, as I said, X may have some sideways continuation. It can remain propagating within this box range of 80.69 to 82.35. And the upside, actually, I think it will remain below this upside range, maybe somewhere below this last pivot, which is currently around 81.847. While theoretically it can go propagate within this range, I think it will remain below 81.84. Right. So with that being said, now what's the expectation? As I said, if the X is complete, we expect one more leg down. If not, then some sideways movement and then eventually a leg down. So basically, one more leg is possibly remaining. As far as upside is concerned, I will only be considering it around or above, I should say, 82.34. Right. And the second count for the bullish scenario is basically very simple. You may have already guessed it. Expectation that Y is complete here, shoot up, right? That's about it for CL discussion, and I'll just move ahead with our next chart of gold. Again, as I said, since all of the discussions worked out, gold was also one of those. So we'll just quickly head over to the recording and see what was being said on this counter. So there's the last webinar's recording. Let's check around somewhere here. So yeah, that was the main count actually. H1, as you can see. Hypothesis one, and we were expecting that this current leg down was a correction. The market was trading around 2161, and once the market had completed the correction, we were expecting a wide movement for wave 5, right? Which will the Roman wave 5, which will then complete the numeral 3 wave degree, right? And now let's have a quick look at the actual chart. This is the chart of gold, and 15th March was the discussion from the last webinar. This was the wave 4 we were talking about back then. I'll just change the color for more clarity. And as you can see, the market did come and give a correction till here, and then it went up from here as well. Literally precisely following our analysis. And of course, this was also discussed in more detail in our Slack private group, as you already know. But not going too much into all that. What is the expectation right now? At this point, we are expecting that it's continuing for a circle wave for correction. And if that is the case, then it can go as low as 2131. Any sustenance below 2131 would be a sign of weakness, possible bearishness. I wouldn't say complete bearishness, but yes, definitely weakness and sign to remain cautious. But as long as it remains above that level, actually it should be here. But as I was saying, as long as it remains above that level, it's all well and good. And the expected correction is zigzag possible. Another possibilities do exist, but zigzag is only correction which can take this market to 2131 levels. So not going into too much detail because it's kind of very clear with these red arrows. We are expecting one more possible leg. If that does not happen, then we expect the market to remain sideways, maybe flat, complex, triangle, whatever may be the case. But if the market just goes, let me just remove everything. If just goes like this, then this whole box range becomes active as a possible sideways correction for flat or complex or something between 2224 and 2164. So that's about it for our gold outlook. I'll just conclude it by saying that these are the two variations. One is like this, and another one we expect one more leg till 2131, and then another leg up. So in either case, we are expecting bullishness. Only below 2131 is the sign or sign of weakness, or what you call cautionary tail. Right. Nothing much to discuss, and I don't see any questions or anything, as a matter of fact, in the live. So I'll just move ahead quickly to our next one, which is S&P's 500. And let's see what was being said on S&P's 500 in our last meeting or 106th webinar. So let's see the recording here, 27 something S&P, somewhere here. So go a little bit back. Yes. So let's play the recording here and let's see what was being said on this counter. So S&P, as you can see, we have a marked level of 5170, and basically the commentary was, you can check the whole thing at your end or at your own pace, that the commentary was that if it goes above 5170, then I'll be interested in taking longs on this counter. And that is what really did happen. 5170 was crossed, and then we were initiating longs, and that was one of the biggest plays in the what do you call week. Hello Hemang, nice to see you back in the comments. I wouldn't say anything in that regard because what we do is basically technical analysis. I do use key announcement points as major time intervals to observe the market activity at. But if the market is going down, I will like the price action to dictate that first. If you combine two, three things like that, you will end up with the expertise in nothing, basically, speaking from a purely trader's perspective. So, anyways, getting back to our discussion here, what I was saying was above 5170 will look for longs, and there is a chart here, and here is 5170. And it did close 5170, crossed, went to 5200, which was a mentioned level. You can again check that in the last recording. Actually, sorry, it's here, 5200, and then 5200 plus levels were also mentioned, etc., etc. But that was what was discussed in the last webinar. I was able to capture a huge move to 50 to 40 actually. Some big positions I exited on this rally, and some I had left, which were left with the what you call target level or profit booking level at 50 to 40. So we were able to capture literally this leg, right? As a matter of fact, some of our subscribers were not subscribers, I should say members or students were also able to ride in on this rally and make some extremely substantial returns. And where's that post? So there we are with our Slack posts updated. Let me see that. Closed 95% longs, exceptional profits, blah, blah, blah. And some were left, 5%, as I said, which were closed around. Then I kept trailing and then closed at 50 to 40. So this whole thing was captured live, as you can see with the posts. 1 second, let me remove this now. Was there anything else? Let me check. I think that is the count we discussed in the last webinar itself. Was posted, as you can see here, 19th. So anyways, let's heading back to our analysis. What we can see here is again a possible correction here, and if we see sustenance below 5230, then it's a sign of weakness. As I was telling you, Hemang, we look for technical signs, not Fed said this, Fed said that. Fed can also do a secret, not secret, I mean unscheduled meeting and say something else, right? So our bias always remains to go with the charts. So what we have is possible correction for wave 4. Again, one more leg up is remaining, and these are the marked support levels around 50 to 30. We expect the market can go and then reverse. It can also reverse without going to that level, and basically that means we are looking for long plays only and only. At least I am. And two ways to do that: either we look for breakout trades, or we look for the market to correct till these levels. What is this? 50 to 35 to 50 to 30. So we look for market correction around till these levels, right? If I get a correction there and then possible reversal here, then I'll be looking for possible long setups here. Otherwise, the conservative setup of going long above 50 to 61 remains the case, right? And we have some substantial legs up, and this is, as you already know, we have discussed this a long time, multiple times. Bull rally is coming. I even had some webinars with the title SPX to new highs, blah, blah, blah. So finally, we are in that rally. Just for context, here it is, right? In an extremely strong bull rally, negative news are generally avoided, or does not gain much of attraction, right? So this is one of those cases. Hello, Martin. Yes, you are late, and this has been a so far very, very dry kind of a webinar. But yes, it is good to see you back here. So heading back to our analysis, as I said, an S&P's counter, what we are expecting is more upside. Just to conclude, and then move on to our last two counts or charts with counts. 1 second. What we are seeing here is zigzag correction, expected levels. I already said 50 to 35 to 30, and once these levels are achieved, we will look to see some sort of reversal. If not, then the conservative level of 61 is already there, and we look for the breakout trades. Nothing much to add here. And with that being said, I'll now move over to our next chart of Nifty, which will be followed by Bitcoin. And again, as I said, all the setups we discussed in the last webinar played out. So I'll still waste 2-3 or of your minutes looking at the recordings, because that's what credibility is about, right? So here is the chart of Nifty 50 is at around here somewhere. And let's see what was being said in the last webinar. So what I'm saying here, so what we were saying was that we are in a wave 4 correction, as you can see with the yellow drawings, and we were expecting that the market will go lower once this wave 4 correction is over. As you can see, let me remove everything from past. Yeah, so I have removed all the drawings from the past webinar. So what we were seeing, as I said, is that we were expecting some more downside in this counter once this wave 4 was complete, and basically we had a marked level here around the dotted line, which is what 21950 something. I don't really exactly know, but anyway, this was the alert here, and what later on happened was the market did literally that. Where is Nifty? So here's the chart of Nifty, and that's the wave where we were talking about on 15th March. Yes. So we were expecting, first of all, a little bit of a triangle kind of pattern, but it really did play out to be something else, kind of a simple flat pattern. Hello, Luis. Good morning to you. And what happened afterwards was, let me just push the count there. The wave 4 got completed, and then there was a gap down and then leg down. And of course, as you already know, I was capturing all these down moves, and we made some plays to the upside as well later on once this low was placed. Now, interesting enough, I think this was not I think this was a marked target level, which was 21758. Not sure if I pointed it in the webinar or not, but this is the mark level 21758. So interesting enough, you can see the market did go to this level, made 2-3 bars only below it, and then reversed. I think 40-50 points only the market was able to go below it. So our target was not only achieved, it also acted as a possible reversal level, actual reversal level, I should say, sorry. So with that being said, again, as you can see, this was the analysis from last webinar. Where's that? Yes, so this was the analysis from last webinar. Yellow line, wave 4 correction incoming. And once it's complete, we look for lower levels. And this is what happened in the actual webinar, actual market, I should say. Now that the market has done all that, what's really happening is, 1 second here, that might need an updation. Yes, so this may need to go here. Some other stuff in play. Now, say, as I was saying, the market has already gone here. The expectation is that we are going to see a corrective structure A, B, C up. Now, there are actually 2-3 more ways to count this, but that kind of becomes complex, and I'm not interested in discussing all that in this public webinar. It can take a lot of time. So, but anyways, going into the details as much as I could, Hemang, I would advise if you are interested in listening to me, you can listen. I'm not interested in reading your commentary of markets. Right? I come here to present my opinions. You can definitely ask questions if you have, but if you don't have any questions, then you can post your opinion someplace else. So as I was saying, what we are expecting here is that the market can, at this point, give a three-wave correction. So I mean, at this point in time, we are kind of late saying that from a predictive standpoint. Of course, we were capturing it live in the actual market with the posts. Let me show you. There's one of the posts we made on Nifty. So we were expecting not only this leg down, but the leg up, and the target level was this white resistance zone. So from 22,014, the market did go down and then went up. There it is. So this was that leg down and then it went up as well. So literally all this and multiple other posts were made in our Slack private group. Of course, we are more of a traders than what do you call forecasters or anything at all. Yeah, I do understand that, Hemang, but as I mentioned, I do not listen to anybody's commentary. If you are learning, keep your analysis to yourselves and then check with the posts I make. Don't come around here telling people what's happening or what might happen. So, getting back to our Nifty analysis, as I said, we are expecting ABC up. We were able to predict that in our own private trading. But now it's kind of late. This was the sweet, simple, free money kind of thing. Leg up, leg down, and then another leg up, right? So at this point, what's happening here is, well, if it's rude, then you can leave, right? I said it to you very politely that I'm not interested in listening to your commentary. Getting back to our analysis, what I was saying was that we were expecting a minimum three waves up. It's already over. So now what's the issue here is that once the minimum is over, anything that happens becomes kind of a risky affair, right? Now, there are two things that can be happening here, which I want to discuss. First is we can see a corrective structure, which can lead to major downfall. Again, that is kind of contrary to what we have in the regular opinion, because if we look at the global markets, we are seeing strong rallies. We are seeing rallies in S&P, in Nikkei. Of course, not all indexes are rallying like that, but that generally suggests that we will be looking for bullish setups. And here I am discussing a completely bearish setup. Now, of course, we know India is in another cycle. We are having elections upcoming. So that may be the case that we have to consider it more seriously. In regular scenarios, we would not have cared about this bearish scenario and we would have gone mostly with the global perspective, right? So, as that being said, what we have here is a ABC correction and possible leg down. That's one of the cases. I would call this, let's say, our hypothesis two. And the second thing is we are expecting a possible impulse up. Now, in that case, we don't have to do anything. We can just mention this as one and two, and anything consecutively that happens will be a continuation of that impulse. The fact remains that we should never cross this low. What is this? 21886. Now, this becomes interesting because 21886 now acts as our level for invalidation as well as possible shorting level. So if the market does really go below it, then we will have to consider the bearish count, which we discussed as hypothesis two, with the more what do you call certainty or strength, I would say, right? So that being said, it's a wait and watch kind of scenario. My bias currently remains sort of not to enter the market. I will be interested in entering it if we see a clear enough correction here and then maybe some up move. So I'll just place some alerts here. I mean, this is not any way a concrete trade setup, but that's just the general idea. It's a breakout trade kind of market here. Above or the upside, we look for upside trades, and on the downside, we look for possible downside trades. So nothing concrete, kind of wait and watch, look for more information, and then possibly plan. With that being said, that's our analysis for Nifty. And lastly, let's head over to our analysis of BTC, which again, as I mentioned, did play out. And we had a kind of, one second here. So let me just quickly go over and show you the last recording or play. Where is that? 1 second, let's check. So here's the recording from our last webinar, and here's the discussion on BTC. So two basic themes were discussed here, and the bias actually was to the upside. Now, what I'll do is I'll pause the recording here. Actually, man, nobody cares here, right? You are the one being rude. I'm not interested in listening to you. Okay, I'll leave. I'm not running a free class here, for God's sake. Sorry for the small delay here, guys. And getting back to our discussion, what was being said about BTC was that we were expecting mostly bullish activity here, but the bias was that only and only if the market goes above 73,000, we'll be interested in longs. And below the level of 66, we were interested in shorts. Now, what really happened here was the market did go below 66,000. And of course, our second scenario played out. Let me just let this recording play for a few moments to see if we can figure out where exactly we were discussing the base scenario. I don't really have that on what do you call record. Yeah, there it is. So as you can see here with the yellow counts, we do have a bearish scenario playing out here, and it is being represented with the possible impulse in play, right? Of course, in live market, things not always plays out in straight lines. I expect you understand that much. But here, what we have is a 1 down, 2 up, 3, 4, and 5. And the setup basically was that, let me just show that on the live chart. Basically, was that if it goes below this level of the last low, 66,000, then we'll be interested in shorts. So, where is 66,000? There it is. And here, the market has gone lower, as you can see, of course, right? Well, Martin has made a comment here. Well, using SMC and trend following are having challenges with PDC. Well, I wouldn't know that, Martin. Of course, I have studied a lot of different methods. They all break down to simple price action analysis. So why not use the advanced form in Elliott Wave? Well, one thing is very clear. People may be getting confused, but here we were having a quick and a better view of the markets, right? So getting back to our discussion, what I was saying was that Bitcoin, we have a possible corrective continuation here. Now it's not necessarily set in stone here. What I have is a little bit of an updated view. I'm proposing that we may have a 1 here, possible 2 here, and again, two can become a bit of a complex structure. But in this particular case, we are not very sure if the 2 is complete or not. So what I will propose is that we consider the fact that wave 2 may take some time sideways within this box range, right? So if the 2 is complete here, that's well and good. The market falls down. If the 2 is continuing, then it can take some sideways movement and then fall down. So in either case, we are expecting some bearishness. There is no 100% confirmation because the second analysis basically is that this whole thing is complete over here. And we are seeing just a nested impulse like a 1 up, a 2 down, and a dot 1. But this is looking weaker and weaker as we go near our invalidation level of 62192. So To be very clear here, what the idea is that below 62192, we expect that the market will go lower and take out the low, right? Which is currently at 60825, right? So if the market takes out this low, then that's well and good. And we do have a sell setup here. Basis of our analysis of this being a diagonal and this being a leg down, right? So this is our main theme and it becomes active below 62192. Now keep in mind these things are listed on different exchanges, so the prices vary a little bit. We are using this data feed, so keep that in mind when you do the analysis, right? Nothing much to add that bias remains active below 62192 only. Let me see if we have done discussed targets. Nothing really yet. So what I'll do is I will look for a possible projection here, and we expect targets around 55226 and lower. And these are the lower targets, of course. I'm not going to say these are precise targets because wave two's position is not confirmed, but that's as far as we can make things clear here, right? Now, next thing being said is that we have not only able to predict all this, we were actually following this chart in live market, right? Where is BTC here? Step by step, we were able to capture a whole, not whole, basically all the moves literally. So I just wanted to show you off. Here it is. So if we follow the post from March 18th onwards, around 68576, we are expecting a down leg. Now let's look at the next post. The market did move lower. Now let's look at the next post. Then we are expecting a correction as a possible diagonal. Now, surprisingly, the market not only did correct, it corrected literally as the diagonal we were pointing with these arrows. Look at that. A down, B up, and C down. A down, B up, and C down. I mean, the correction is there. Of course, a little bit of strength to the downside, suggesting more bearishness. Let's see what else. Then we were expecting some upward movement on the counter. Here it is. A up, B down, C up, a zigzag correction basically. And then the market did, as you can see already, this is the last post, did go up. And we have already discussed things thereafter, right? So that's about it for our discussions on BTC. I have made my understanding of the counter very clear. The bias is remaining bearish unless we see market sustain above 62 226, or basically just check whatever this level is at your end, right? And no bullish activity or no bullish trades as long as the market remains there. Possible consideration above, what is it, 67,000, let's say 67,200 something. So only above that, but as long as it remains below it, we don't really care, and it may very well just go lower, right? So thank you for staying with us till the end, guys. And if you enjoyed the content, of course, so make sure to hit the like button and share the content. And lastly, of course, if you are enjoying the content, you can, of course, share it in multiple social media platforms, including LinkedIn, Facebook, Twitter, or whatever you guys are using. Your contribution and what you call help in growing the reach is always welcomed. Right. And I'll see you guys in the next one. Take care. Bye.